Welcome to Mortgage Minutes, where we demystify the loan process for you. I'm your host, Austin Baker, along with my co-host, Jonathan Bond.
What's up? Boom, 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 boom. So today, Austin and I want to help you buy a house.
That's what we do.
And the title of today's Mortgage Minute video is Eligible Funds for Down Payment. So why is that important, Austin?
Well, for most people, if you're talking to us, it's because you're not buying your house in cash. So you're getting a loan. Most loan programs are going to require that you get some skin in the game. You've got to put some money down to be your initial equity in the property.
Mm-hmm.
The question that we're looking at is, where can that money come from? This is something that people can sometimes get hung up on. So we're going to hit the buckets that it can come from with a bucket or two where it can't. So make sure you watch the whole video. There's some shocking surprises.
Some bazingas, if you
Watch out.
watch out. So the first one we have up here is checking and savings.
Checking and savings, you're good to go. That's your bank account. That is absolutely a good place for your money to come from for the down payment.
The next one we have on here is bridge loan. What's that?
Yeah, so bridge loans, cash outs, HELOCs, this is all a group of where you are borrowing against the equity that you have in another property that you own. So if you're buying your next house and you need to leverage some of the funds in your current home because you're not selling it right away, you can do that. Or if you're, taking a loan out, cash out of an investment property to buy another investment property, you need those funds for the down payment. That's totally good to go. Might affect your DTI. That's a whole nother bucket. But as far as eligible source for funds for down payment, this section is good to go.
Gotcha. And so the next one we have in here is dollar bills. And I'm handing over the red marker. Womp, womp, womp.
Red light, green light.
What's happening? Why can't I use cash, Austin? Got it in the mattress.
So we have to source the funds. You can't show up to closing with a briefcase full of Benjamins. You've got to make sure that we can trace where all this money's coming from. Because one of the things we're checking is we're making sure that there's no money laundering going on and other things. So we need to be able to show where all the money that you're using for the down payment came from. And really that's what's going on from this group. Most of your funds are going to be in here and they're going to come from one of these categories. So that's what we're looking at. Cash, no dice.
All right, so the next one we have here is gift funds. So I can hand back the green marker.
Give me the green. Gift funds are good to go. This is where you're getting gifts from a family member, for example, and their mom and dad want to help you buy your house. That's great. Absolutely legit source of funds for down payment.
And the next one we have is another gift. This one's called Gift of Equity.
Yeah, we need to shoot a whole video on this. But essentially, you're buying mom and dad's house. Mom and dad want to give you the property. They're not trying to make a whole lot of money on it or any. They're just trying to transfer the title of the property to you as well as the debt. We can definitely use the equity they have as the gift for your down payment.
Great tool to use. The next one we have is business assets.
Yeah, we'll do a question mark and a check mark there. This is, okay, you're self-employed, you've got a business, and you want to use funds from your business account as the down payment. That is technically speaking fine, but big caveat, underwriting is going to want to check to make sure it's not going to adversely affect your business for you to do so. So there's a stress test that they're going to run to make sure. So you may or may not be able to use it.
So the next one we have in here is other liquid assets. So a bit technical, but Austin and I wrote out some examples. What are these?
Yeah, so first one out of the gate, cash value of life insurance. So if you've got a life insurance policy that has a cash value to it that you can leverage, then that is an acceptable source of down payment.
Perfect. And the next one we have is automobile sale.
Yeah, so automobile, that's a placeholder. Pretty much anything you can sell, technically speaking, and we can use those funds for the down payment, but we have to be careful to document it properly. And automobiles are typically easier to document than other items. And so, yes, technically speaking, you can sell something, we can use it. We just have to make sure that we can document everything really well. So be careful there.
Gotcha. And probably our favorite under this category is the tax refund. It's tax season. Most Americans get a tax refund every year, and that's a great source. The next one we have is proceeds from other property.
Definitely. So if you are selling your current home before you buy your next house, you can absolutely use those funds for that.
Yeah, so we call that a double close. You sell in your house in the morning, and then you buy your new house in the afternoon. The title company keeps all the funds there, and you're good to go.
You're just switching keys.
Exactly, switching keys. And the last one we have is secured borrowed funds.
Sure thing. So essentially, you are borrowing against a secured asset. So if it's an unsecured asset that you're borrowing against, we're not going to be able to use it. But if it's a secured asset, we can. First one out of the gate is retirement. So 401k, IRA, you can definitely borrow against your retirement accounts to be able to use that as a source for down payment. But again, be careful. It could affect us on the debt to income ratio side. So as long as you're good there, you're good here.
Perfect. And so this last one, I'm kind of smirking because Austin and I find it pretty hilarious, even though it's 100% legitimate and you can use it, but it's auto title loans. So if you own your car or vehicle free and clear, you can actually put a lien and pull cash out of that vehicle to put a down payment on a house.
Yes, you can.
Now, do we advocate that? Most likely not. And the reason why is a home is an appreciating asset, but that car, that vehicle, most people agree is a depreciating asset. So you don't want to really add debt to it. There's a lot of other ways to get a down payment, but looking at Fannie Mae, this is a really viable way to do this. So
you can do it, and no judgment from us if you need to.
Yep, absolutely. Yep. So these are the ones we wanted to go through. We just hit the high notes. Obviously, there's a lot more nuts and bolts with each one, so reach out to Austin and I. We'd love to give you more info, but our goal is to help you get in a house, and here's a lot of the ways that you can. So we'll see you guys next time.
Adios. Whew. Oh, that was a week. Woo.
That's perfect.